man, that's a lot. You're gonna take out like $3.2 million in income. Are you gonna get the same amount? Now here's how these grow. You're probably wondering, well, how do they do this? Well, that's what's so great about the income riders. And they know this, and that's why they give you less income. Hey there, welcome to the Guaranteed Retirement Guy Show. My name is John Stevenson. Today we're going to be talking about how much a $1 million annuity will pay you. So if you are wanting to purchase an annuity and you've got a large lump sum that you want to put into a guaranteed contract that will give you the most income possible, I'm going to show you right now exactly what that's going to pay you. If you look at my computer, you will notice that I have a couple in here who is married. Actually, you know what? For this scenario, I'm going to do a single payout. 62-year-old male who wants a payout in 5 years. Let's look at the higher scenario, and then I'll show you the lower one with a joint. I usually recommend joint, but let's look at both, okay? So if you look at $1 million, you take it out in 5 years from now. So you hand the insurance company $1 million and you want the highest guaranteed contractual income no matter what. Okay, so this is great for people that they just don't want to manage it. They don't want to manage their investments. They don't want to have to deal with real estate. I got a lot of guys that will sell their real estate investments and they'll buy these because they just don't want to deal with it. They want to travel and enjoy. So if that's you, then you're going to like these payouts. So $1 million, single payout. Here they are. F&G, highest one, $112,000 a year, followed by Clear Spring, Delaware, Corbridge, SPIA, and all these other ones. So, wow, look at them. They are all, this is just the first page. They're all over 100 grand a year. It's pretty good. So, but if you want the highest one, F&G is it. So pretty good payout. If you look at that and let's say you live for 30 years, what are you going to take out? You're going to take out, man, that's a lot. You're going to take out like $3.2 million in income. And you can see the account balance doesn't last. I mean, it'll last maybe to 76, but then it's gone. But again, this is an income product. It's not a legacy product. So if you want growth, legacy, we've got other annuities for that. Or you can just leave your money in the stock market. And that's what a lot of people do. They'll buy annuity contracts that provide a lot of guaranteed income for you, and then they'll put the rest of their money in the stock market or whatever. So it's a great way to secure pension income. And this is exactly what this does for you. So now let's take a look at the joint payout. The joint payout obviously is going to change things because now the insurance company is on the hook for 2 lives, not just one. All right, so Corbridge is the highest one for this one. That's still, it's not bad. It's not bad. It's not as much as the single payout, but still 104 grand. That's guaranteed for both lives. So again, if you're married and your spouse is a female, she's going to statistically live longer than you. And they know this, and that's why they give you less income. But at least you know it is guaranteed for the rest of both of your lives. And that's important to know because when that account balance runs dry, you don't want to die right after that and then leave your spouse nothing. See, look at this. Runs out by the time you're 78. Let's say you die right after that. Let's say you took the higher payout, 19,000. Let's say you took that. Great. You took your money, but then you died at 78 and your spouse does, she doesn't get anything. There's no income. There's no lump sum refund, nothing, okay? Now, if something happens to you before that, yeah, your spouse is going to get whatever's in there. You can see the death benefit right here. It's showing you what's available. But I don't recommend that. When you're married, do the joint payout, okay? And it's not that much less income. I mean, it's like $3 million. So yeah, you're sacrificing a couple $100 grand, but it's now you're covered for both lives instead of just one, okay? So now you're thinking, all right, well, that's fine, but I want to take income right now, okay? I want to take immediate payout. Well, are you going to get the same amount? Well, you only have it with the insurance company for like a month before you start taking income. So yeah, it's not going to be the same amount. It's going to be less because they don't have as much time to grow it. And again, we're looking at the income rider, and the income rider typically will pay out the most income. Okay, so based off of this, yeah, 67,000. It's not bad, but this is starting next month. So if you want 67 grand for the rest of your life and it's a joint payout, Prudential will do it. You can see they're the highest payout for that. And what is it? The total payout is $2.3 million. So still not a bad payout, and it's guaranteed. It's guaranteed for both of your lives. This is a joint payout, but again, it's not as much as if you would left it with them for 5 years. So, all right. So let's go back and say, okay, well, I want more income than that. In fact, I want to wait till I am 70 to take income. Okay. What does it look like there? Well, you're letting us sit with the insurance company for 8 years now. Okay. That's definitely going to give you a higher payout. So Clear Spring is definitely the winner, 136, almost 137,000. Then you got Delaware, then you got Nassau and Nationwide and so on. So a lot of good options here. So if we went with the highest one, let's see what that looks like. So you take income out, you take it at 70, so you deferred longer. Let's say you wanted to wait till Social Security was maxing out. So you want to get as much as you could from that. Okay, well, you get that, plus you get this annuity payout. It's like $3.5 million by the time you're 95. So it's definitely a higher payout for sure. If you're looking for like higher like spousal income and you want to have the highest Social Security payout plus the highest annuity, then this would be the way to go. Now here's how these grow. You're probably wondering, well, how do they do this? Well, they're investing in call options with the S&P 500, so they're making money off that. They got high-grade corporate bonds. They're making a lot of money with this premium before they have to pay you out. And because of that, they're able to guarantee you a much higher payout. And so it gives you peace of mind, but it also allows them to be solvent and make a profit. Okay. And so you'll notice what they do is they give you a benefit-based growth, and this is guaranteed. Okay. As the benefit base grows from $1 million to pretty much 2 million right here. If you let it sit there for 8 years, it is guaranteed to be that amount. And then they're going to take that 2 million, multiply it by 6.85, and that's what gives you roughly $137,000 for the rest of your life. If you take it earlier, you can. They show you. If you take it in 7 years, it's 124. If you take it in 6 years, 113, and so on. So you absolutely can take this out earlier, and it's flexible. That's what's so great about the income riders, but it's less. So anyways, that's totally up to you. So let's go back here and say, okay, well, we've looked at the income riders. We know $1 million will give me, in 8 years, it'll give me 136,000. Okay. In 5 years, and this is a joint payout, of course, we already know it's higher for a single. 5 years is 104. And then immediate is 67. Okay. So now I'm going to go to the SPIA calculator, because SPIAs are irrevocable, non-cash value annuity contracts. They're the classic annuity, but they're great for income as well. And if you want to put like a 30-year period certain on there to guarantee it for a certain number of years, no matter what, that's a great option for that too. They just don't give you as much income as the income rider. Okay, so I'm going to do joint life. And we'll just say same age here. Just keep it simple. Okay, immediate payout. Let's see what that looks like. All right, so it's less. So it's 55.46. It's not a lot less though. So 55.46 times 12, 66,552. It's like almost $1,000 less a year. So the immediate payout's definitely less, and they'll give a refund to your beneficiaries of whatever used up, whatever balance you haven't used up. So okay, so we got that. Now let's go over to the 5-year, 2030. Just trying to do a straight comparison here. So this is 79.16 by MassMutual. That is 94,992. So roughly 95 grand. That is quite a bit less than the income rider. The income rider was paying what, 104? So that's a big difference there. There's a $9,000 difference right there. Okay, now let's go back here and say, well, I want to wait till 70, right? So I'm going to defer this for, what was that, 8 years? MassMutual, 10,116 times 12. It's 121,000 guaranteed for the rest of your life and your spouse's life. Not bad. The issue is it's $15,000 less than what the other one was going to pay. So quite a bit less as far as income. Now, people ask me, why would I ever want to do this? Well, here's why. You go back here and say, well, and let me just go back to 2030, and then what was it, like 95 grand versus 104? But let's say I want to do a certain period. Okay, okay, a 30-year. So instead of having a cash refund, if both me and my spouse dies, I want the income to continue to my kids, or I want it to continue to a charity or whoever, no matter what. So it's still joint income for both of us, joint for life. But if something happens to both of us before 30 years has elapsed, the income will continue until the end of at least 30 years. Okay, so that is what you can do with these contracts that you cannot do with the income rider. That's going to give us $71.57 a month. It's $85,884. So it's not the 94. So you're just taking a sacrifice, right? You're sacrificing like another $9,000. So now it's really low, right? It's a lot lower than the 104 that you get from the income rider. So it's quite a bit less, but you're getting something else different. You're getting joint lifetime income, which is what the other ones were giving you, but you're also getting a certain period. So if something does happen to both of you, that income will continue. So if you have a disabled child and you're like, I really want to make sure they have income for at least this period, no matter what. So if something happens to us in 20 years, at least that income will continue for 10 years. It's a great option. And it's really, these are the only options for adding that to a lifetime income. Now, since we're looking at certain periods, some people will buy a certain period only. They're like, I only want this for this many years, and I want to see how much this money will give me just for that period. Okay. So then I'll just say certain only. That's it. I just want it for 30 years. If we live past 30 years, it's going to stop. Okay. So I just want to annuitize my $1 million. Okay. Now I'm going to, let's keep it at 2030. We'll look at the 5-year. Let's just see what the 5-year deferral is. Okay. Well, it's not much. 67.73. So 67.73 times 12, 81,000 per year. Oh, that's less. Times 30 years, 2.4 million. So that's the guaranteed payout off of 3 million. Oof. Yeah, it's quite a bit less than the other one, especially if you live a long time. All right, so let's go back here and say, well, we want immediate payout right now. But it's only for 30 years, not a lifetime now. But it's same $1 million. All right, 57.25 times 12. 68,700. So there you go. It's a little bit higher than the lifetime income, right? That you were getting on the income rider. But the income rider is guaranteed for life. This one's guaranteed for 30 years. So anyways, I hope this helps. I wanted to show you exactly what $1 million would give you. If you got 2 million, it's just double these numbers. Okay, if you got $500,000, it's half these numbers. So it's very proportionate on how it works. But I don't care what amount you have. I mean, if you got 100 grand, if you got 500 grand, you got 700 grand, and you're thinking, I'd like to buy an annuity, John, I need some help. Then there is a link below this video. It goes directly to my calendar, and we can get on a Zoom call. I'll show you everything that's available, and then I'd love to help you buy an annuity if that's what you're looking for. Otherwise, you can go to my website, johnstevenson.com, and you will see all of the annuity options there as well. And you'll be able to look for yourself. And then if you want to book a call, there is a link there as well. I'd love to help you if you're looking for an annuity, and if you're looking for someone who's transparent, who's willing to show you everything that's available, even if his commissions are less than maybe another product that would pay you less but pay him more, which a lot of guys do that, unfortunately. So I will show you everything, and I would love to help you if that is something that you're looking for. Otherwise, if you've got questions, comment below. Would love to answer them. And if you like the video, make sure you like, subscribe, share, and I really appreciate you for watching, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.